have to be over and above what you pay them back. The world has changed. I mean, in years ago, nobody did like the offer that I read you yesterday from the email that I got. They wouldn't do it on real estate buying individual homes. And years ago, nobody would do it on movies. And years ago, they wouldn't do, the spectrum of investment opportunities was much smaller than it is today. And the reason why they're doing them now is because the investment opportunities aren't as great, one, and two, the competition, the amount of venture capital firms, the amount of private equity firms, and the amount of hedge funds are in the thousands. There's tens of thousands of these guys all running around. And the guy that runs the venture capital firm, the old formula used to be, we take 2% of the total money assets in the fund, total money. If you've got a $100 million fund, you're going to collect $2 million a year in fees. And we will take 20% of the amount after you get your money back. After we get our money back, it's paid off, we take 20% of the profit. Now the 2%, because management fees have gone down, and now management fees, I know some really big funds that only take a 0.5% management fee. But I mean, when you manage $10 billion, a 0.5% is still a lot of money. But 5 years ago, they were still collecting 2% of $10 billion. But now they're as low as a 0.5%. I think the lowest I've ever seen is a 0.25%. But they're still taking a 20% carried interest for free. They call it for free. It's not for free as far as I'm concerned. Of what you make the business grow to. The downside from people that want to fall in love with their businesses is they force you to sell. It's not that, maybe I'll sell, maybe I won't sell. As soon as the business is ready to sell, they'll sell. They also put at least one person on the board, and even though there's only one person on the board, that one person has more voting power than all the rest of the board put together. If I told you we did the four-season Crestacare deal, which is one of the biggest healthcare deals done to date, it used to be the biggest, I don't know if it still is, where we bought for 135 million pounds Crestacare. We took it private, it was on the London Stock Exchange. We privatized it, and it was sold 5 years later for 750 million pounds. And the management team got 20 or 30 million pounds between them. I think 30 million, the CEO, Hamilton Amstead, got 20 million pounds for 5 years' work. And venture capitalists serve a purpose. They're tough. They're tough managers, and they very often throw out the CEO or the founder. Some of the venture capitalists allow the CEO founder an opportunity to actually manage. Benjamin, you're a kid, you don't know shit, you got snot rolling down your nose, but we'll give you a chance. And so if they like the deal enough, the more value the entrepreneur founder brings, the higher the probability of them keeping you. But most deals, the entrepreneur doesn't bring that much value. Most deals, the barrier to entry from somebody else, like, to go get Marcus to do Benjamin's deal, assuming Marcus understands that industry, we can kind of, just steal the deal.